Hello, and welcome to my performance review of April 2025. In this video, I want to talk about the volatility in April and how I traded it. Then I'll be talking about what started this £10,000 account experiment, and then I'll give a status of the £10,000 account experiment, and then I want to discuss what my next video will be about. So just to give a review of what's going on in my account, I took a screenshot of the trading portal, and you will see that my account is 31,686. Please do not ask me how I managed to lose 1.3 million on the demo account. I have no idea what was in there, but let's focus on the real account. And here's a snapshot of the actual platform. You will see that I have an account balance of 31,686, and I have 3 open positions. I have the beginning stages of a speculative long in US light crude, and then I have been bullish the markets, somewhat bullish the market, Nasdaq and Wall Street, Dow, for about a week now, and I've been trying to buy dips. It's also affected how I have traded, not always in a positive manner. Having a directional bias is not always to one's advantage, as I witnessed during the trading session on Thursday and Friday, but we'll get to that. So April was a month where the volatility really kicked in. Of course, this was the result of the US president making comments about and implementing tariff measures against key trading partners all over the world, namely China is the one that stands out. And so most trading days for me are the same, but then you have trading days where you just sense this market is going to go in one direction or another. And so what I've done here is I've taken some screenshots on how I actually managed to make, on a relatively small account, which this is at the time was 28,000. A little bit later on, I withdrew £8,000 from the account. And so you can see here how if you go to the 10th of April, you'll see the spectacular movements in both the US indices but also the European indices, and I really scaled up my trading size because I felt this market was getting very weak. Here's a snapshot. The Dow made a low around 7 o'clock European time, and here's a snapshot a couple of hours earlier when the Dow was still trading at 39,700, and I had begun to implement short positions. That was over here, and I posted this in my Telegram channel. So it's about here that that wasn't exactly the point. It was about there, 39,690, 30,700, about there. And as I often do when I am really in the mood for it, I will add to my winning positions. You will see many videos where I aggressively add to winning trades. And so this position here at this stage here, which I think was about here, actually ballooned from £4 and significantly higher, all trading in £1 a point, and the Dow fell another 1,200 points, which perhaps makes it a little bit easier to understand how I could make £8,000. And that wasn't just, by the way, in the Dow. it was also in the Nasdaq, it was also in the DAX index and the FTSE index. So the headline for this slide here is most days are the same, but every now and then you will be given an opportunity. And of course, it's not like I knew this was going to happen, but you get this sense that this market is weak. And how do you get a sense that a market is weak or strong? Well, I think in part it comes from experience, in part it comes from having traded for so many years. For example, the Friday just gone, I had built a long position in the Nasdaq, and all of a sudden the Nasdaq turned around and my extremely profitable position turned into a loss. Small loss. I didn't manage to get out of break even. And then the market went down and touched the low end of the range, only to rally back up again. And at the time of closing my stream on Friday in YouTube, I said I am absolutely certain that this market is headed back up to the tops again. And so why would I say something like that? Well, because I ordered all my trades and all my trading days, and so you remember the days that hurt you. And I had a similar experience some months ago, also here on YouTube, where I had been stopped out of the Nasdaq on a very profitable position, but ended up losing, only to see the market shoot in my favor. And that was also on a Friday. And so later on the Friday night in my Telegram channel, I posted several trades, and I did make sure that I posted them when they were actually losing, because from time to time there will be people who will be reacting to me posting winning trades, which of course, if I showed you this trade here, I did post this live in Telegram, and I even had a position here that was losing me, and so I had an average price around 690, and that I was trading around 650, and I think we can agree that 40 points in a market that had already moved from 40,200 down to 39,700, which is a move of about 500 points. 40 points is less than 10% of that. But I did receive criticism, whether it's founded or not, that I should have posted everything I did. I will refrain from comment on that. I will just say that I did what was right for me on that particular trading day. I started the year differently than I would normally do. I I cleared my account, and then I deposited £10,000, and so this was the balance on the 6th of January, and the first 3 trades that I had actually brought me below, so that was a drawdown, and then it sort of began to look much better. But what started the £10,000 experiment was a gentleman. I'm not sure I would call him a gentleman, but this person here, Paolo, first accused me of being a scammer, because I, during 2024, had traded my normal size account, and he felt that I had not posted everything, which again, I trade around the clock, but I only stream an hour and a half in the morning at the most, and I stream again an hour and a half in the afternoon when the US opens. But there's many other opportunities that presents themselves outside of my streaming time. But it was this point down here that he made that did resonate with me. He said, trading is hard enough as it is. If you're not here to help, leave people alone. And somehow it resonated with me, and I decided that I was going to do a £10,000 experiment, because I felt that me trading a £100,000 account, which is my starting amount every year that I then attempt to grow, may not be aligned with what most people can afford. And I felt that £10,000, while still a lot of money to many people, at least though it was closer to what a standard trading deposit would be, as opposed to my more elevated £100,000 account. And so with that in mind, I started 2025 and said I will change how I run my channel. I will still trade it live as normal, but I will trade the account size. And the reason I would want to change the account size is so that I am able to show people who want to learn how to trade how you can grow a more normal size trading account. And I stated that I would focus on teaching my setups daily. This point number 3 is a point where I feel I haven't perhaps been have been living up to my own expectations, and perhaps yours as well, because in the heat of the battle, I think many times I have not been as educational as I perhaps would have liked to. So I posted £10,000, and I stated that my job would be to grow this £10,000 account with sensible money management. I started off being rather conservative, trying to risk no more than 0.5 to 1% of the account until the account had at least grown in size. And I feel in hindsight, now that we are in April, we're actually knocking on the door of May. So we're 4 months in, and of course I'll update you on the status of the account shortly. But I feel that I could have perhaps been quicker to increase my trading size, but I haven't, and I think that in part is because I have been careful not to get ahead of myself, because I really wanted to show people that the tools that I use, which are predominantly mechanical trading entries, that you are able to make a living from trading using simple approaches to trading entries. Having said that, I'm also extremely mindful that there are several aspects that talks against the argument that I'm making. One of them being is that I am not forced to make a living from this £10,000 account. I have the comfort of knowing that I can afford to lose. And you may not think that matters much, but psychologically, there is a saying that scared money rarely wins. And so with that in mind and being mindful of that, I decided not to increase my trading size quicker than I felt comfortable with had I traded and if my life earnings and my living depended on it. Now this is an important point because I trade pretty much all day. It means that I'll be following the market, sometimes intensely, sometimes less so, but I am mindful of what's going on. This I bring to your attention because while I stream and trade live twice a day, I only do so in a rather limited amount of time. So most of my streams, I think, are somewhere between an hour and an hour and a half when Europe opens, and the same when the US opens. So in all, I probably stream 2 to 3 hours every single day. However, my trading day in Denmark starts at 8 a.m. and it finishes at 10 p.m. when the US markets close. So it stands to reason that out of that time period from 8 a.m. to 10 p.m., which represent 14 hours, there could be many setups that I see, but I wouldn't necessarily be able to trade it live because I can't stream for 14 hours a day. I wouldn't want to stream for 14 hours a day either. So there are many trades that the public does not witness, but I try to keep people updated, and I think I have been very transparent in updating people when I have been trading. But I also hold my hand up and saying that during the month of April, there has certainly been trades where the market was so fast and the moves were so volatile that perhaps I decided to have these trades for myself out of fear that it was going to blow up in my face. And so the criticism that has been coming my way about the size of the trading account, which I'll disclose in a moment, I can't say that not all of that criticism is founded, because I believe that some people have made good points. However, it is also just an attempt to show anybody who wants to learn to trade that it is indeed possible to generate a living or an income from trading. It won't be easy, because it isn't just setups that will count towards fulfilling that ambition. You also need to know when to, say, press the accelerator and when to play defensive. And I think that comes from experience. And of course, experience actually comes from having your nose in the trenches. One of the setups that I rarely get an opportunity to trade is the setup that I will teach you in the next video, which I'll release next weekend, called the Brunch break. The Brunch break is the result of extensive research into the school run strategy, and then realizing that there was another 15-minute bar in the DAX that lent itself well to another mechanical bracketing, which was the 7th 15-minute bar. And I would like to show you the DAX for the last week. The DAX was only open 4 trading days, mind you, but let me show you these 4 trading days. So here's the market open, and if we count 1, 2, 3, 4, 5, 6, 7, so here you're seeing the 7th 15-minute bar in the DAX. So say that you live in Europe, that would be the bar that opens at, the market will open at 9 a.m. and so this would be the bar that completes at 10:45 if you live in Europe. This bar here is a bar that I bracket just like I would bracket a school run bar here and here. It triggers along, market goes back and forth, never stops sharp. But the advantage of the brunch break bar over, say, the school run bar is that by this time the volatility will have died down, so the stop loss tends to be significantly less than a school run bar. And then the market, in this case, rally very nicely. So this was Friday. I'd like to show you Thursday, which was an astounding example. The market breaks out above the brunch bar, and then of course the brunch break bar is the result of many hours of research into what bar is likely to change the market. And in this case here, it was a phenomenal trade, producing more than 200 DAX points. But at this point I had stopped streaming, and I didn't trade it on the £10,000 account either, mind you, so it's not like that anybody can be angry with me. But I did trade it on my other account, and it turned into a very significant trade. Wednesday was less promising, a very big bar, and that bar there made me nervous instantly. You will see how the market breaks out, but it's a false breakout, and my stop loss was down here to begin with. But when I see a bar like this, I will move the stop loss up, because in my experience, if the market doesn't break above and stays above a brunch break bar, it is likely to fail. In my book, Best Loser Wins, I wrote a chapter called Flip the Switch. Flip the switch is basically a concept where you switch from being long the market to being short the market, or vice versa. And as you can see in this example here, it did work. It's not for everybody to flip the switch, by no means. I don't seem to have a problem with it, but perhaps that's because I know my research very well, and I know when to do something and when not to do something. Doesn't mean that I always win. I certainly don't. In fact, one regret that I have this year, I used to have a lady called Q. That's her her code name Q, and she logged every single trade that I executed. And since I started trading live on the £10,000 account on YouTube, I simply asked her not to bother anymore because I felt that every trade was logged in YouTube. I regret that now, because I think if you had the Excel spreadsheet over my trades for 2025, you will be surprised to see how what's the word? Not abysmal, but how average my hit rate is. I'm not a 90% correct trader. I don't even think I'm a 70% correct trader. I think that my hit rate, if I had the Excel, would show that I'm probably right about 50 odd times, 55%. If you have the stats and if you logged it, then that would be interesting to hear. But unfortunately, I haven't. In Q, if you are listening to this video, please come back and do the stats, because I would very much like that. Anyway, moving on to Tuesday, which was the first trading week, as another example of how the brunch break works, but not very well, but well enough for me to contemplate moving my stop loss up from the lows and move it up higher, and then consider flipping the switch short here. Okay, so my intention is to post a thorough review of all the techniques that I use next weekend, and I think that will help you greatly in understanding how I implement my trades. Also, the trades that take place outside of conventional streaming hours. So here's half the story. I started with £10,000. Okay, admittedly it was 10,005, and I ended January at 14,233 and 54 pence, which was a 42% gain on the month. The February was a month where I took 10 trading days off for holiday, and the result is evident. I only made 15.97% on the month, and at that point I was up 65% on the year. So up 42% on the year, up 65% on the year. March was better. I made 35% on the month, which took my account to 123% on the year. But April, in spite of the extended Easter holiday that I had, has been the best month so far, in large helped by the tremendous volatility. And I am a volatility trader, and I'm particularly strong trader when the market falls. That is my forte. I love shorting. I once read somewhere, I don't remember who it was that said so, but it was definitely a he, and he said, the first big win that you ever have, or what you are mostly inclined to do, will probably dominate your thinking for the rest of your trading career. And I remember that the first trades that I put on were short positions. They weren't long positions. Yeah, I ended up blowing my account. This was it was in 1997, 98. So it's a fair few years ago. But yeah, I put on a short position in the Dow, and that did not go well. But I have an affinity for shorting the market. There's no doubt about that. I've gotten a lot better at taking long positions as well, and I had to, because if you can only do one thing, you are rarely going to do very well as a trader. You need to have a balanced approach of being able to stay both long as well as short. So the account with free trading days left of April currently stands at 32,691, which puts me up at 227% on the year. And these are trades that have been executed whilst streaming live on YouTube. But as I've already alluded to, there's more to the story. And so here's a screenshot from my account that shows all the withdrawals that I have made on trades that took place outside. And these are almost always on really volatile days. The big ones at least. The smaller ones are just things that happened in my lunch break, etc. But in total, you can add an additional £20,007 on top of the £31,000, which puts the total at 52,698, and that's with the open profits, which puts my account at 427% so far this year. Is this realistic for the new trader to accomplish? I wouldn't like to say it isn't achievable, but I do believe that you need an exceptionally strong mindset. You need experience to recognize the really big trading days as they unfold. And you need to be able to hold on to positions and add to positions. This trade here, the £8,000, which was a result of FTSE, DAX, NASDAQ and Dow, it wasn't just in one instrument, they could not have been accomplished trading £1 or £2 a point, or even £20 as it was in the FTSE, had I not added to the winning positions. So you really need to consider how you are going to add to your winning positions. It needs to be part of your trading arsenal to contemplate, I feel this market is very strong, I'd like to buy more, or I feel this market is very weak and I'd like to sell short more. So that's the status. Now I get a bit of a kick comparing myself to the Robin's Cup, which is a trading competition, and as of this week the leader is up 253% in the futures trading. I noticed that this gentleman here, Carey, well, last time I checked was up about 200%, then he was down to just 50-60%, and now he was back up to about 180%, and now he's down to 69%. It's an incredible amount of volatility, and I think that's another key point I wanted to discuss, and that is that I attempt my P&L to be as steady as possible, and I'll come to that in a second. I try to avoid these. That is not for me. Of course, I cannot make a like-for-like comparison, because I believe that the people who trade in the Robin's Cup, there's two things going against them. One, they pay very big fees, and this is one of the reasons why I am not inclined necessarily to partake in this competition. I have heard stories from my Italian friend Fabio that they pay an enormous amount. So respect to the people who are in these competitions, because I think they are paying for the privilege compared to the transaction cost that I have. Two, and that's another important point too, I believe that the people who are trading in this competition are trading on 10 or 20 times leverage. And remember, I'm trading on 200 times leverage. So it's not a like-for-like comparison. So to this person here, Tay, and to Pavlos, you really have my greatest respect that you have managed to achieve these kind of returns. That's, on the surface, seems to be great trading. However, what I'm most proud of, and I think that's bare mention, now that I spoke about this gentleman here, Carey, who had been up and down and up and down, is that whether you want to state my profits to be 227 or 420%, I'll leave that for you to decide, but they have been traded on my account. I know that from my experience that achieving these kind of returns in an era, or shall we say in an industry where most people actually end up breaking even or losing, is very difficult. However, what I am most proud of isn't so much that I made this money. It is the volatility that my account P&L went through. And so what I'm most proud of, and what I think if anybody wanted to model my trading behavior, well, it would be that my worst drawdown in the first 4 months was just 4%. It means that there's very little deviation in my P&L. Even this Friday just gone, which by no means was a good trading day. I came into the trading thinking, oh, today is Friday and it's video number 100 as well. So there's a bit of a round number in there. I was proud to have produced 100 videos about my live trading, and I was all fired up to have a good trading day, and I wanted to be a buyer of the Dow Jones because I had a very strong analytical reason for being long the Dow. And then what does the Dow do? It decides to decline 200 points off the open, and I had a loss in Europe and I had a loss in the US. But even so, in spite of the loss that I had, which monetarily was quite a big one compared to when I started 4 months ago, I still only lost 1.14% of my account.